it's going to definitely make it easier to sell new construction at what is a material discount, because most of our new construction stuff would be under the $1.85 million cap threshold. So whether it's 10% or 13% or varying degrees of discount, that's a meaningful enough gap to start spurring people to come out and start buying. Does that mean that the $1 million townhouse that is now $870,000, does that mean that an enormous amount of people are going to get off the sideline and start piling in and creating a frenzy? I don't know if that's the case.
Sure.
But it's definitely creating incentive.
All right, Peter, welcome back. Thanks for being here.
Good to be back.
Sasha told me today if we beat his highest view record, he's buying us lunch. So no pressure.
Should be easy.
I'm hungry, but no pressure. All right, so let's get into it. So there's been a lot of announcements recently from various levels of government for new programs aimed at starting housing activity, making housing more affordable for everybody. I'll name a few. High level, we have the federal GST relief for first-time buyers, Ontario HST holiday for homes up to $1 million, and a joint $8.8 billion aimed at reducing development charges up to 50%. You put those all in a blender, now you've got some meaningful relief, right, for buyers and developers. But at the core of it, there's some nuance, particularly on the HST side. So traditionally, when buyers were buying pre-sale, pre-construction housing, there was a gap between what they were paying for the pre-construction housing versus what they could achieve on the resale side. They're essentially buying future value. That gap has diminished a lot on the high-rise side, and it's all but been eliminated on the low-rise side. You bundle in this sort of new HST program, and now, in all likelihood, that gap's eliminated across the board, right? So, when we look at these targeted incentives, and when we look at these programs, part of the stuff I want to talk about today is it enough to bring buyers back? Is it enough to unlock activity in the development space? Or, does the broader market uncertainty just mean that the overall market gets reset at a new price? And if demand does come back, does that mean that the other players in the ecosystem kind of fall in line, get in tandem? The developers, the financiers, the municipalities, do they all follow suit and start to deliver supply back into the market? So now when we look at, call it the March 2026 announcements from Queen's Park in Ottawa, what would you say is the single most meaningful change that we could see as a result of these announcements? And is that change package proportionate to the problem, or are we just kind of skimming the surface here?
So you in one very succinct question has 90 things to unpack, all of them being slightly different, slightly nuanced. So everything has to be broken down, as far as I'm concerned, into ground-related housing, like homes, townhouses, back-to-backs, all those kinds of things, and condominiums, new condominiums.
Sure.
And then subsections for new, standing inventory never resold, and new to be built inventory. So the HST rebates, I believe, on the low-rise side of the market are going to be very meaningful to allow developers to start selling both new construction, some of the standing inventory, which may be a little unintended optionality for the developers, but it's going to definitely make it easier to sell new construction at what is a material discount, because most of our new construction stuff would be under the $1.85 million cap threshold. So whether it's 10% or 13% or varying degrees of discount, that's a meaningful enough gap to start spurring people to come out and start buying. Does that mean that the $1 million townhouse that is now $870,000, does that mean that an enormous amount of people are going to get off the sideline and start piling in and creating a frenzy? I don't know if that's the case.
Sure.
But it's definitely creating incentive and more aligning costs with the ability to come in and have people buy new construction product. We're seeing it already. We've had a launch recently in Stouffville where we had a back-to-back product where, when you're talking about something in the $600,000-$700,000 range, $60,000 or $70,000 off goes a long way for buyers.
Yeah.
We sold 65, units in a weekend, all new construction, all to be built. What we did was we just literally passed on all the HST savings to the buyers.
Sure.
Part of that's a little bit of marketing. We say, price plus HST, or the first price, and you scratch it off and show them the discounts they're getting. So feel like they're getting something. So I think that's going to start helping the market. I think that that's going to get the low-rise market moving, which then I also think will affect the resale market, because a lot of people don't want to buy a new house that's 1 or 2 years away from delivering if they're not sure if they can sell their house or what they're going to get for their house. So that's really been something that I think is going to get people to buy, get people to start willing to hit the market bids on the resale side, and it's going to help stabilize and move things forward. On the development charge front, as it relates to low rise, that story has not yet been written. We're not sure what municipalities, when, if, how much, or when that's going to happen. It's a limited pool of funds, how they're going to qualify. Even the municipalities don't know. So that's something that's going to work its way through. There's nothing that we're doing today, whether it's a buying decision or a selling decision, that we're making assuming any DC savings. That would go a long way as well on the housing front, for sure. So that would be a very welcome thing on the ground related housing front. Those have been big deals. We're selling stuff in our sales centers where we've seen both more traffic and sales that we haven't seen in a minute go through there. So all that's very positive. I think the HST program on the low rise side is achieving what they intended it to be achieved as a start. We'll see how that goes and how that plays out and what happens. As far as the HST goes on the high rise front, the reduction in HST is just simply not likely enough, in my view, to spurn new construction. Still, the total cost to deliver these things relative to resale is still a big gap. But even more so, you got to remember the duration to deliver this product is typically 4 or 5 years. That has typically been more of an investor-geared market. Not to say that we don't have our own end-user developments where people ultimately live. Those are fewer, far between. It does not make up, the average condo that has a 600-ish square foot average unit size is geared towards investors buying and renting, not towards end users. So that has not been enough. The DCs, which again, we don't know how it's going to play out, if, when, and how much, and what, if any, strings that comes with, whether it's affordable housing, which is just a separate invisible tax or not. Those two things are going to make it a lot easier for us to get back to a price that we might be able to get investment going. But without the DCs, I don't think that is the case. And even with the DCs, we're going to see if that's enough or not, depending on the areas and the locations, because obviously they vary from time to time. So I think it's a very good positive move. I would have liked a little more clarity, specifically on the DCs front of it. That's going to come, I think. But everything, at the end of the day, we're working against a budget, and there's deficits and there's cost to all this stuff. So I understand that it's complex, but I do think it's a step in the right direction. And for investors to feel confident, I think the first thing they have to do is feel like their real estate assets are stabilizing in value. And I think, especially on the low rise side, that's going to help. This is going to help do that.
And when we look at the provincial program specifically, they announced that it's geared towards projects that had shovels in the ground prior to March 2026. Do you think that is sort of the intention there, is to kind of clear existing inventory, help clear existing inventory, or does it create like a 2-tier system now?
Yeah, I mean, the people that have already bought, doesn't help them economically. They've bought, they've done that. They're going to have their assets and off they go. It's spurning new building, and that's what the purpose of it is. Do I think that there's going to be some unintended collateral damage potentially in ways that we're not really sure? There could be, but do I think that the greater good of it all will make sense? And I think that there's nothing that's perfect. If it was a perfect solution, we would have all waved our magic wands already and had done that. But yeah, there's some people that may have bought something 2 months earlier that feel like that they've been aggrieved in some way, shape, or form. But that's part of the reality of the markets and how things can change. And I think that we have to deal with those things.
And you just touched on the DC side. I want to get back to that. So assuming, let's say for a second, that we have some form of DC relief, call it 50% DC relief. And I know this is a project by project question, so it's difficult to answer like in a general form. But on a pro forma side, assume you've got 50% DC relief coming in. Does that repencil the economics on it? Does it make it feasible where it previously wasn't?
It definitely helps. It goes a long way on the low rise side.
Okay,
for sure. It's actually kind of interesting because the programs have a duration and a delivery time. And if you're buying something today, like, you're looking at something that has 100 or 200 acres or 50, like, you're not assuming that this is going to be the case for an indefinite period of time. So
yeah.
you're probably not even underwriting that in your new buy.
You don't know if you fit into the time window.
Maybe there may be something that's approved that
Sure.
some portion of your inventory could fit in or whatever. So I think that's like a kiss rather than like an uplifting market change. It's for the things that exists today to help move forward. On the condo side, I think it helps some stuff get a lot closer. And probably more of the periphery stuff in terms of cost. Some of the stuff in the downtown market, it may not be able to move the needle enough with 50% DCs and HST to spurn like massive activity. Can it hopefully start getting it going again? Maybe.
And we talk about like the ability to do it. What about the confidence to do it? Is it something on the policy side, or is it something on the market side that would give developers like the confidence to proceed?
I think it's there's a reality of the demand today, and we sold. I think I just saw the latest Urbanation report, like 254 new condominiums in Q1 in the GTA.
That's wild.
So if you need to start and selling a pre-sale for 200 or 300 or 400, forget about if it's a 500 unit building in one location. Obviously, there's just no ability to get that many buyers interested in one location to hit a pre-sale threshold. So some of it's math. Obviously, rental has an aspect in this. Can you shift to purpose-built rental? The DC's savings in purpose-built rental, I think, is going to go a lot further of a way than the for sale condo. That's going to be a really big thing if we can eliminate those things. There's more certainty about when we get in the ground, because at the end of the day, if I'm selling something, I don't know when I'm going to start and how that's going to fall, how long it's going to take me. And then there's costs and there's buyers and there's reputational, there's all those things that come along with doing that. So on the rental side, I think it's going to go a long way. On some of the stuff in the periphery where we thought we were selling for 1050 or 1100, and maybe with HST and DCs or something in like the mid or high eights, or like, now we're talking about a per square foot number that may become more attractive to people for new versus old, for buying in the future, all those things. So it's really so nuanced, but we don't have enough information today to make launch or for sale decisions, and definitely not buy decisions, because as you know, getting from buy to selling something in the GTA takes a bit of time.
Of course.
Is probably not affecting our buy decisions. But I don't think the province or the federal government intended to affect new buy decisions. I think they affected to, we've got a bunch of inventory that's out there that we want to process, get our people, our construction people back working, get our unions back working. We all want to be, have them all back working. So I think that their ideas are in the right place. They do have to come out with some of this stuff. Some of it is left to the municipalities as well. Some, like Vaughan, have already come out and been vocal about it. Others privately have said, we do want to do it. We're not really sure how it's going to work, and we can't be left with a hole in our budget if it doesn't work out the way that we think it's going to work out. So those discussions are happening, and I think they're going to go a long way.
And you mentioned for a second, if you're building purpose-built rental, you have a lot more certainty around timing, right? You can go shovels in the ground. On the pre-con sale side, it's more fluid. You got to pre-sell a bunch of inventory. Talk a little bit about like what the other players in the ecosystem can do to jumpstart that. The bank, CMHC. Do you think there's other sort of initiatives or programs and the role they can play?
Yeah, I think the banks there's limited flexibility in the way that they lend today. The most flexibility they have is will we accept a margin on cost that is lower than previously something we would want to lend against, which is like, it helps. It's like it's a small difference. It's not, now this will unlock an immense amount of fund. They're not doing it for 1% margin or 2% margin on cost. Like there has to be some kind of buffer for the banks. So the DC relief is just a cost coming off. It lowers equity. It lowers total cost. It helps you refinance more. It helps you do all those things. So I think that's a really big thing for the rental. CMHC, they're almost moving to get further away from the construction side of the business in terms of their policies and their programs. The takeout programs that exist, I think they constantly change, which is a bit of a challenge. But they exist and they will continue to exist. It's really, they're an insurer at the end of the day. They're not they don't provide the finance, they're providing insurance at the end of the day. So CMHC programs are moving away from construction. Banks are doing the best they can with what they have to work with, which is a little bit of help, not zero, but not a major needle mover. The DCs and those things are definitely going to go a long way, I think.
Interesting. And now when you look at all the things we're talking about right now, and you look at Greybrook specifically, what does that change for us, our investors, whether it's existing projects, the way we look at future projects, now that all these things are kind of coming into fruition, what, if anything, is changing?
Yeah, I can't stress enough two things. One, not only how every project is unique in its own story, about how we've been perpetually I don't think I could ever really explain to somebody how much time we spend running scenarios after options, after different stuff for every different project and what we have. And some of them are in different positions. So there are some that we bought at what turned out to be a very peak point of the market in terms of, let's say, the low rise side,
Sure.
that we're prepared to process as fast as possible at as small as margin as possible to move on and make a few bucks and deploy our money in a better spot. There are some that, on the condo side where we just can't sell things for an amount of money that is available for us to build and execute it. So whether we're sitting and waiting, whether we're reevaluating with the current lens in terms of what that means for purpose-built rental, we're evaluating senior housing opportunities. We're obviously constantly evaluating everything, and we make risk-reward decisions at the end of the day. And those things are not unique on a market basis. And we're not in it to squeeze every dollar, everything, regardless of time. We're not in it to cut our noses off to spite our faces and do something that doesn't make sense. And we balance those every day. We balance duration. And there's so many different things that we talk about, what we could do, couldn't do, financing, partnerships, all those things. So I think that this is giving us more tools in our tool belt. I do think that it's going to unlock our ability to move certain things forward, maybe on purpose-built rental that maybe previously were more of a challenge to do it. But there's no one end-all, be-all, here's a plan for every single thing. Because this happened, we can do this in every single project. That's just not a reality of the way the world works.
And there's obviously going to be a lag between some of these announcements and their implementation and them actually having an impact on the market. So when you sit back and look at the way things are transpiring, is there like a key signal you look for that makes you say, okay, this stuff is working?
Yeah, I think it's working because people are coming out to see what's going on, right? For sure, the traffic has gone up unequivocally across the board.
I saw people camping at a site in Oakville, like literally it's back, like the whole craziness, right? Yeah.
Yeah, I don't know if the craziness is back. Yeah. I think that there's definitely a lot more activity, and that's really good. Simple things that people don't even think about. We had a buyer come in to buy something in one of our condominium sites. Okay. Actually, it was on April 2nd. It was the day after it was supposed to take into effect. And they're like, okay, I want to sign an agreement of purchase and sale. I want to get the HST back. And these are like clauses that have to exist in the agreement. And we're like, well, we don't have a prepared clause because we're not exactly sure how everything is going to work. And so now we spend 10 days speaking to lawyers and what does the clause look like and what do we do? So it's not like people think like something happened and tomorrow
it's ready to go.
It's just no problem. It's ready to go. And then we spoke with all of our partners and said, well, how are you dealing with this clause? Are you assigning the rebate? Are you taking the rebate yourself and passing on the savings? And who takes the risk? And all these things start happening in the industry. So we need to sit there and we're moving forward on some of those things. Some of our partners have taken certain positions. Others have taken slightly different but similar positions. It's working on the low rise side for sure. I've seen no real noticeable pickup on the for sale new construction condo side. I think it's working for some of the standing inventory stuff, which is good. Yeah. But also some of the federal government, the provincial government talking about putting funds together to buy inventory and turn it affordable. Well, yeah, I saw that. They're going to get the benefit of this too. I think the number one theme is the intended thing is the benefit to be passed on to the consumer. Yes. And we haven't done anything and we haven't seen any real movement that says anything other than the benefit is getting passed along to the consumer. It's not just being secretly pocketed by the deep, dark development world, as the media likes to portray sometimes. Sure. And I think that is a very important thing. And that part is for sure working.
And I'll wrap with this. What do you think is the biggest watch out for us now that these things are coming into play? Is it municipality participation? Is it labor? Is it, cost of material? What are you watching out for?
The sooner we can know what the municipalities are doing opposite the DCs allows us to move more things forward for sure. More things on the rental market forward. Maybe some things in the for sale pre-con market. Definitely across the board on the low rise side. And the development charges are so nuanced. Yeah. And there's so many. they passed legislation, which was positive legislation some time ago, that said once you make a site plan application, you might freeze your DCs. And then they're indexed. So is the 50% discount off of what I froze? Is it off of the new DCs that aren't what I froze? That's a higher amount. And what risk am I taking? Like, there's all these discussions that I don't, getting into the weeds of it with people. There's a lot of weeds, and I can't make a decision that says, well, Peter and his portfolio is going to do this because I'm in Fergus and I'm in Hamilton and I'm in Durham region and I'm in Pickering and I'm in Brooklyn and I'm in Markham and I'm all different municipalities, all dealt with differently, and they all have to come to their own individual conclusion. So the sooner we can get clarity on that, I think that can really help move things along. I think we're a long way from so many people having so much work that we're, costs are running away, and it's like we're so far from that today that that's some version of a champagne problem. But I don't think that that's where we're going to go in the next little bit. And then we have to figure out when this HST holiday ends, what that means, and that's something that no one's talking about today because we have like today problems. But for sure, if there's a day where everything becomes 10% more expensive the next day, sales are going to slow down and stop. Which is the thing, right? So that's something we have to figure out in all this. But today, we're focusing on moving as many things forward as possible. We are passing along the savings to the consumers, and I think that's the best thing that the government can hear. Yeah,
well said. I listen, second to watching hockey, my second favorite sport is politicians in front of microphones. And I think that, headlines are one thing, and I think they do great. And to your point, I think the intent is right, but implementation and execution is the name of the game. And, while it's clearly starting to move some momentum, there's so much uncertainty. DC specifically, I think, is a huge question mark that still exists. So it'll be, we'll have to wait and see how that all plays out. Peter, thanks for being here.
Thank you for having me.